What's up, everybody? Hope everybody is having a great weekend. As always, let me get a tweet out real quick just so people know we're live, and then I will be right back with you guys. Let's see here. Okay, tweets out. And get the link posted. True Trader. There we go. All right, what's up, everybody? How are you guys doing? What's up, Sam? Oh, it's been a great weekend for me so far, and we still have the rest of Sunday too. So, hope you guys have been having an amazing weekend. Got a pretty good Sunday prep, I think. Some great ideas, and I think we have a really good week of trading ahead of us. So I'm excited for the weekend, or for the week ahead. We finally have a 5-day work week. Woo! And I believe, let me go check the calendar real quick. I think next week, it's either next week or the following, is a 4-day week again, right? So let's see. I think like the 16th or something. Martin Luther King Day is the 16th. So what is that? Let's see. Yeah, so we have a 5-day week, and then a 3-day weekend, and a 4-day week next week. So it's just, it's that time of year, right, where it's like, we come out of the holidays. Of course, during the holidays, we have a lot of short weeks, a lot of low volume, a lot of boring, snoozy markets. And then we hit the ground running in the new year and just have these 4-day weeks, and it just feels really hard to get the momentum going in the markets, right? Because we don't have the full 5 days to generate these moves. But it is what it is. It happens every year. It's nothing new. We just deal with it and we move on. But yeah, so make sure you guys understand, next Monday the market's closed. As always, give it just, what's up, get her done, Steve. We'll let some people kind of straggle on in, and we will go live, or we'll get the actual Sunday prep started in about 2 minutes. Okay, so what you guys been up to this weekend? Can chit chat a little bit till we get this thing kicked off. What's up, Sunil? Yeah, so far I had a great weekend. Last night I took little Ricky to the monster truck rally, and it was epic. It was super, super dope. If you guys follow me on Twitter, you've probably seen some of the pictures I posted. Had some golf, played some golf yesterday. Got the monster truck rally in. Enjoying my Sunday. I worked out in the morning. Typically I do the workout. Usually I go work out after the Sunday prep. I just decided to knock it out this morning, so like I have my afternoon cleared. Oh yeah. What's up, Josh and Cook? Yep, no complaints here. Had a great weekend so far. Yeah, and I watched the earlier football games, right? So the Dolphins just eked into the playoffs. That was a garbage game. 5 field goals. It was a 5 field goal game. Obviously, they didn't have their main quarterback in, so I don't know if that's really an excuse to play like shit. Hey, and actually, it's Steve. I see that you're in here. I will answer the question that you had kind of asked in the lounge in True Trader during this episode, right? I'll touch on that, right? So, stay tuned for that. Make sure, if you guys can do me a solid, please retweet the tweet I put out, and post the link to the live stream either on Instagram or Facebook or wherever else you have people that would benefit from it. Remember, it always helps us to get more eyes on it. And make sure you hit that thumbs up button. I'd like to get as many likes on there as possible. And then remember, when the show's over and we're not live anymore, please go leave some comments, right? And if you're watching this not live, if you're watching just the recorded version later, it really does help if you guys leave me feedback. Honestly, it helps with the YouTube algorithm, but it does a lot more than that. It actually helps me to try to figure out what I could do better, right? And I read those things all the time, every week. I go through them. There's not a lot to really go through, but you know, can't fix it if I don't know it's broke. All right, guys, it's 5 p.m. market time, so we might as well kick this off, right? As always, real fast, some housekeeping. If you don't have a broker that you can absolutely trust, like your best friend, you need to find one, because that's your main tool as a trader, right? Is the company that you execute your trades through. Check out Cobra. There's a link in the description. They have a really cool sale going on right now. I don't remember the date it ends. I think you have about a week where you'll actually get your commissions cut in half. And I believe 3 months free of whatever platform you use. And whenever that deal expires, you still also get I want to say it's 25% off the commissions, and that's actually a really good deal. It adds up, guys. It really does. So there's a link for that in the description. Spikeet, I use these guys to create backtest of different things I see in the market. If I want to see that they actually have a statistical edge, whether they do or don't, right? You got to prove or disprove it, because you can't just be trading off a whim, right? And so I use these guys. I also use these guys to create scanners for after the market's closed, to find stocks that have meet certain criteria, right? And we'll kind of go over that a little bit during this episode, because at the end I'm going to talk a little bit about that. There's a link in the description for them as well. ScriptsToTrade, these guys create tools for TradingView and Thinkorswim, and they have a whole suite of them that you get with the monthly subscription. Some very, very powerful tools, guys. Gap stats, volume forecast, you name it, they got it. And if they don't, reach out to them, and you can work with them one-on-one to develop whatever tool it is that you can dream up. They'll make it a reality, okay? Tradervue, this is who I use to record or to track my performance metrics. I say it every week. I'm going to say it again. If you're not tracking your performance metrics, you are just treating this as a hobby. You have to treat this like a business if you want to be successful. Think about this, guys. You are competing against some of the most well-capitalized, smartest, sharpest individuals and funds that have the craziest tools at their disposal, and you want to come in here and just try to wing it, right? It's not going to work, guys. It's even when you have all the best tools and you put in the work and you do what's required, even then it's not a guarantee, right? So treat it like a business, guys. Take this serious, all right? So track your performance metrics. There's a link for them as well. If you only trade 100 or less trades per month, you can actually use the platform for free, right? It's up to 100 trades. It obviously doesn't come with all the bells and whistles if you have the subscription, but still track your performance metrics, guys. All right, and there are some earnings coming up. Obviously, there's a few tomorrow, but really Friday's when the banks start reporting, and then the following week we start getting in some of the bigger names, right? So be prepared, because we're gonna get busy again. All right, guys. So that's that. Oh, and of course, if you haven't checked out True Trader yet, guys, please do yourself a favor, because I talk every Sunday about a lot of these different aspects of how I see a market, but I'm only giving you about an hour of my time once a week for free, right? But there's so much more nuance to it. And on top of that, if you come over to True Trader, you'll have access to the nuances that I'm talking about, but you also have access to a bunch of other pro traders that really, really do know their stuff. One of them is one of my personal mentors, and probably one of the best traders I've ever known, right? So check us out. There's a YouTube, all caps, coupon code or whatever to get you, I believe, 20% off. Or there is a 5-day trial. I believe it's $45 now, which honestly, like, if you're on the fence, just spend the $45 and come check it out. If you don't like it, no harm, no foul. But you got to invest in yourselves, guys. Whether it's a community for learning where you have like mentors where you can reach out, whether it's tools like ScriptsToTrade or Spikeet. Those are the kinds of things, right, where when I say treat this like a business, that's what I'm talking about, right? Invest in yourselves, guys. Give yourself a fighting chance. All right, let's get into the disclaimer real quick. Neither I, True Trader, or any of our affiliates are registered as security broker dealers. I'm not a licensed financial advisor. Nothing I talk about today is a solicitation to buy or sell any stocks. It's simply for entertainment and educational purposes. All right, guys. So make sure you understand this is your upcoming week of economic data, right? Stuff that you need to know that's coming down the pipe. The main one is Thursday. You got the jobs numbers and CPI, right? Those are big ones, right? So make sure you're prepared for that on Thursday. Keep in mind they're pre-market, right? So you will be able to see how the market's kind of reacting to them heading into it. Also, make sure that you know that's happening pre-market Thursday if you plan on swinging anything Wednesday into the close or overnight, right? Let's get straight into the ES. Again, we kind of had that push up into some levels. I think, we look like we're set up to push a little bit more, and I would like that retest of the 39.50 area. Remember what that kind of coincides with SPY, right? Is that 392, 392. Remember, we looked up the exact price last week. It's 391.97 or something, right? So let's watch for a press into that level to set us up for the possibility. Remember what we talked about last week, the possibility of getting that short continuation trigger to the downside. Doesn't mean that it's going to just turn around on a dime right there, but that is the first level where I'm watching for this to find that major resistance that could get us rolling back over. Let's hop into the daily real quick. Yeah, so it's going to push us, if we push, right, it's going to push right up into a monthly. Obviously, the next level above that's going to be the 200-day, and then we also still have that declining trend line. And as always, I feel like I always have to reiterate this. Trend lines don't mean jack shit to me. They're just a visual guideline. For me, what is the most important is the actual trend, higher highs and higher lows, or lower highs and lower lows, because you can draw a trend line anywhere you want, and it may get violated. But if the actual trend itself is still intact, that's much more important than a trend line being violated. So make sure you understand that when we talk about a trend line like this. That is, for me personally, just the way I use them, is a visual guide. Obviously, I know that lots of other traders are using them, and so it is important to know what other traders are seeing. So for that reason, it's also another thing to make sure you understand where traders' eyes will be. Also, the 200-day right there into that 4,000 psychological level, as well as the previous annual pivot. And remember, the first 2 weeks of a new period, right, like the new year, a new month, a new quarter, or in this case, all three of those. I still will use the previous period's pivots as key levels, even though the new pivot, the new annual pivot's up here at 40.57. I would be silly to not think that the previous period's annual pivot still holds weight. God, it's a lot of P's to say, right? So much alliteration there, it's ridiculous. All right, so those are the key levels of resistance I'm watching. To the downside, and remember, it's going to obviously depend where we open tomorrow morning, if we're gapping or not. If we're gapping up, already up into those levels, I'll still watch to see if they hold. But, I'm not looking to fade anything until I see a trend develop. If we open flat or gap down, any kind of spike into those levels, I'm definitely looking to fade, right? And same thing for levels of support. If we gap down, then this first level that I care about a lot, this 38.50, which is kind of into that quarterly pivot, as well as some levels that have been tested quite a few times, that level's probably too close. And I would be the next level down, which is right around 38K, or not 38K, 3,800, sorry. And so, I like this level, this 38.50 area, if we open flat or gapped up. If we open anywhere gap down, I'll, like I just said, the next level down is where I'll be. And then, of course, 37.50 and 37.20, 37.15 or whatever that level was down there is the next levels of support. And so those are where I will be watching to at least. So here's the thing. Remember, I'm still very logical and rational about what's happening in terms of the trend, right? The weekly time frame, the monthly time frame are still in downtrends, right? We're still in a bear market. So anytime I'm talking about these long ideas at the moment, I am still talking about day trades and bounce plays. Keep in mind, if we come under, we made that push up last week. Let's just look at a weekly so you guys can see this, right? So we made the push up. So now if we lose 37.8850, that's your short continuation trigger, right? So if that happens, that is what sets up, remember what we discussed, the ability to have our first possible higher low forming on a monthly chart. So that is going to put us in the levels where if you wanted to anticipate down into like the 3640s or whatever, is where you're going to get that good risk reward. Again, I don't think we have a reason to believe that this bear market is ready to end, right? Well, the Fed's still planning on raising. There's still a lot of headwinds ahead of us. I just honestly, I could be wrong, but I'm still gonna just stick to my thoughts that we're gonna have some kind of narrowing of price action, a contraction, and a base being built. Remember, I still have that box drawn on the SPY where you can kind of see where I think this could just coil up and go sideways for a while, right? As long as we kind of stay in those ranges, we could just build a base here. But that doesn't mean there's not a whole hell of a lot of day trades to be had during that, as long as you understand what's happening in terms of the trend. So go back to the ES. Now, the reason I said that was because if we lose that 37.8850 level right here, in terms of positioning for that anticipation long trade where you're willing to be wrong more often in order to get that extreme asymmetry in the trade, meaning like, we're thinking first target is back to all-time highs because we're going to go back into a bull market. You're trying to anticipate something like that where you're going to get that kind of risk reward, then it's okay to be wrong. And where you're going to be wrong is under these 52-week lows, right? Underneath 3,500. So anticipating right after that short continuation trigger, this level here and this level here, that's not the spots, right? Those are going to be just, in my opinion, too early, because this could really speed up, and I think we could come right down into the 3650s, which if I was going to, I'm not saying I am, but I know there's a lot of people out there that have capital on the sidelines. It's super easy to tell that because everybody's been trying to guess the bottom. Like, that's been the question ever since January of last year, is like, where's the bottom of the bear market? Are we there? Let's see, the bear market started, at least the high started late January last year, right? And as soon as we started rolling over and breaking key levels, seriously, it wasn't even like February, and people were saying like, where's the bottom? Where's the bottom, right? The same people that for the last decade have been trying to call a top on a bull market, right? It was still really early, and it still kind of could be, right? We still could head lower. There's no reason to believe that this can't come down into the 3200s or maybe even lower, right? So if you are that person that's sitting on that cash that's like dying to put their cash to use and try to get that asymmetric trade where you're gonna probably be wrong, but if you're right, the risk reward is gonna more than compensate for it. That 3650 to 3640 area is the area to do it with risk under 3500. Again, I want to be so clear because no matter what disclaimer I put at the beginning of these Sunday preps, I still feel very, very iffy about discussing these things, because I know people hear it and go, they want to anticipate that low. They don't want to wait. They don't want to wait for a higher low and then higher highs and the trend to confirm, because then they're paying up, right? Then you're paying up and you're not getting that asymmetry. And, people want to get as close to the bottom as possible. So when I talk about it, I get worried because I know people might hear that and go, Ricky said that's the spot to try to get long. Well, yeah, it is, but you're most likely going to be wrong, right? We come down 3650, you have to be that person that is ready to stop out under 3500, because that's what the author is telling you. If the author comes and makes new lows, guess what? Bear market's still on, and we didn't make a higher low on the higher time frames, right? That would mean that on the monthly chart, if I can switch to it here, that would mean on the monthly chart that we put in a lower high and we made a new lower low, and the trend is still down. And as long as we're in a bear market, you don't want to be positioning long, trying to guess a bottom in dollar. I guess I don't want to say that too, because I know a lot of people just dollar cost average in because their time horizon is so long, right? 10, 15, 20 year time horizon. I don't think I can make this argument that you shouldn't dollar cost average in. But, for me, when the trend's down, I'd rather just wait for the trend to be up, and you can dollar cost average in on the way up, right? If you ever watch or if you've ever read the Turtle Traders or any of Michael Covell or Jerry Parker's stuff, the turtles that are trend traders, those guys are not trying to guess a bottom. They are not averaging to a loser. They are waiting for trends to form to the upside, and they're trying to add to winners, right? And I happen to just agree with that perspective a lot more, because then you're not fighting the path of least resistance. So getting a bit long-winded here on the ES, I gave you guys the levels of support and resistance. I just wanted to make sure I'm clear about if you're that person that wants to anticipate, I don't think these earlier levels are the levels to do it. I think it's closer down to 3650 with risk under 3500. And again, I think you have to be willing to know that you're most likely going to be wrong, right? The reason people anticipate is for the asymmetry. They're okay with being wrong more often in order to get that really, really asymmetric return. All right, and the one thing I did want to note about NQ is that NQ actually had the short continuation trigger already. Where was it? Did we break? Let me look at the daily. Maybe I was looking at the Qs. I know on the monthly we broke ever so slightly, right? You can see it on the monthly here. December's lows were 10,758.75, and so far January's lows pierced that by ever so slightly, right? 10,751. So you technically do have the ability to have a higher low forming on the Nasdaq, but we won't know that's a higher low until what happens? Until we get back over December's highs, right? So if this holds and we push and get back over December's highs, that is the first attempt on the higher time frame, the monthly chart, to show a reversal, that we're finally ending this lower high, lower low pattern and this trend, and we may try to push. Now, there's so much overhead that, there's no reason at all to buy this thing over December's highs. You just have to know that that's the first confirmation, and at that point, then you want to buy dips with set risk and try to ride a trend. But that is the difference at the moment with the NQ, with Nasdaq and the SPY, right? Is Nasdaq has broken December's lows, the ES has not, right? So at least not yet. Oops, I hate when I do that. All right, let's Bitcoin. Of course, I can check that out real quick, but again, nothing's changed, right? It's still just consolidating in this channel. The weekly 20 is kind of creeping down. I still think, now the fact that the weekly 20 lines up with this previous support, I think any spike back up into those levels, anything up into the weekly 20 is probably a good spot to look to fade, especially for day trade type stuff. So if you trade Coin or Mara or Riot, those may get pushes and may find some really big resistance if Bitcoin gets going and runs up into those levels. You can check out the daily just to show you guys here. Yeah, anything up into this 18,360, 18,4. And the one last thing I did want to touch on that I usually don't talk about this very much, but that is just the yield curve, right? This is the 10-year and 2-year, and this red line up here is where it flips from positive to negative, right? And you can see we've been negative for quite a while, and not only quite a while, but let's go to a weekly real fast. More inverted than it's been. Look at all the previous times when we come under and invert. It doesn't spend as long under nor as inverted as it's gotten in this bear market. Okay, I just wanted to point that out too, right? So still have that inverted yield curve there on the 10 and the 2, and you hear a lot of talk of a possible recession in 2023. So we'll see how that plays out. But I just wanted to throw that out there. And if you guys want to understand how to get that chart on TradingView, it's just US10Y-US02Y. And I think it's a good thing for you guys to periodically check on and just know where those kinds of things are. All right, so let's check out bar chart, and we'll do the sector analysis real quick. Pretty strong bounce week for some sectors, right? You had comms, financials, industrials, and materials all had pretty decent pushes. You had relative weakness in utilities and healthcare, but again, say it every week, say it again, just so in case it's your first time watching this. You can't just look at these numbers and take them at face value. You have to go look under the hood, check out the ETFs, and see what the actual charts look like, because this does not tell the whole story. All right, so we're going to do that now. We're going to head over to our ETFs and go through them real fast. Retail, I think we talked about this one last week, the possibility of getting that push. It looked like it was setting up for it, and definitely we got it. If you saw some of the retail names, I think Nike was an idea from a Sunday prep either last week or the week before. And it pushed, it gave a beautiful trade, and it very well could push a little more. I think, like I said, the 63.70, 63.80 areas where I think we might have that first sign of resistance. But it wouldn't surprise me to get through it a bit with the 200-day just above, and maybe we go test 65. We'll see. I think pullbacks can be bounce plays into the 60 area as well, 60, 61. Just throw that out there and give you guys both sides of it. Financials, remember they had the strong week. They got through what I thought was going to be some tough resistance to get through. What I'm interested in seeing is early on in the week, do pullbacks to 35 hold, and do we get another leg higher up into this 36 area? If not, if we come back under and stuff 35, then the next spot I'd be interested in is the 20-day, right? This level of support that held on Thursday, 34, call it 34.40. Can't hold that. Obviously, next support is going to be down 33s. Remember, I still think the weekly looks really great on this, and I think this thing could make a turn. Let's check out the monthly. When I see a weekly like that, the one thing I think of is the monthly needs to be looked at, and it's right into the underside of the monthly 20, right? You could see it rejected in December pretty bad, but we're going to go, looks like we're going to go retest it. We'll see what happens on that retest. But if we can't get back over December's highs, it wouldn't surprise me to see then a retest of December's lows and the possibility of rolling back over. So keep that in mind. But I still think the weekly looks good. Put in a major. Remember, this chart has done this a few times now. Look right here, the failed breakdown where we lost this level here and just retested the 200-day, and then it was off to the races. What does it do again? Comes back down, failed breakdown, and now we're up. So now does this make a longer term higher low here is what I'm kind of interested in seeing. If not, if we lose 33.20, I think we're coming back down to the weekly 200. Okay. Real estate. That failed breakout right here on mid-December, what was that, 4 weeks ago, that's still pretty ugly. So I think any kind of pushes up into those 40 areas really going to have some struggling to do. If we can't even push and then we come under 36, that's just a short continuation trigger, and this may come and retest lows. Let's check out the daily on it real quick. Yeah, also struggling with the daily 20, and you also have a daily setup here where if we lose Thursday's lows, I think this could get ugly, right? Thursday's lows can send it tumbling to test that 36 level, right? Remember, we were just seeing that on the weekly. So under Thursday's lows, you may want to have an alert, just saying like a little bit of a daily short continuation trigger off the underside of the 20-day, which may cause like a domino effect on the weekly chart, which may cause us to lose that 36 level, which would be a weekly short continuation trigger, which could send us another leg down, right? Healthcare. Now remember, this one had relative weakness, but what is it still doing? Remember, and this is why I say you got to check under the hood. Still holding that key 134 level, and not only is it holding it, but it had that little failed breakdown, right? We just kind of like identified the same look on the financial sector, right? Those failed breakdowns that then push. So I'm very, very interested in watching to see if this gets back over 137. Because if you come down here, have this little failed breakdown, and then we get back over those levels, that's when I think we could get a pretty good push on this sector. So I'd be interested in fades on a push into 137 if it rips. But the sector still looks strong, and you have to understand that over that 137 level, and you need to be reassessing your game plan and asking, okay, I'm in a strong sector here in comparison, right? Compared to a lot of these other sectors that have just gotten smoked during this bear market, this is one of the sectors that's been behaving pretty well and holding key levels. That's when you have to ask yourself, like, what's the path of least resistance, and do I really want to fight this? And I also think with that failed breakdown on Friday, any kind of flush back down into 134 should be really, really good for bounce plays. So if you have individual names in this sector, this is a good spot to be looking for longs if we get that early flush and support shows up. So materials, I still think 8180, 8190 gonna be a real problem for this name. If it can't push, again, you have that weekly short continuation trigger set up on the break of 76.66. You guys should be understanding how you can see a weekly chart on a daily, right? The way I just told you, you can see this weekly short continuation trigger here. If we lose this level, you guys have to start seeing a weekly chart when you look at a daily. I don't have to go look at a weekly chart to know that that setup is there, okay? I know that that's what that's gonna look like if I pull up the weekly chart. So if we come back under that 76.66 level, that's that first lower high followed by the lower low that can send us back down into the 71 level, okay? That's just one of those things that when you start to see charts the way I'm trying to show you guys how to look at them, you don't have to really go into those other time frames to see what they look like. You just know, okay? Industrials, still, remember, we talked about this one. We wanted to see confirmation one way or the other. I think you got it with that break over 99. I like this big push, but it's right in the key resistance, right? So I think flushes back to 99 need to be looked at as good scoop opportunities, maybe a little lower, maybe into the 98.30s. But I like the way this pushed. Granted, we come back under 96 and that's failed, right? That's a failed long trigger. Oftentimes failed long bias triggers create the most powerful short triggers, right? So if you are trying to buy flushes into 99, make sure you understand under 96, game plan's busted and we need to revisit or reassess. Utilities. So this, you know, I actually stopped out of the Duke Energy trade just because we started pushing above some levels, but I'm trying to get back into that trade. I just kind of want to see a push up in the 72.50 area, right? You had this push here that's stuffed and it's going to line up with that trend line. I want to see that become that lower high, and the weekly chart I still think looks really prime to have this eventually come back and break under this 69 level. So I'm going to keep an eye on that. Granted, one of the things, guys, that you'll hopefully notice when I have these ideas is that I have no problem being objective and staying rational, and if what I wanted to see doesn't start to unfold, I have no problem at all reassessing and making new game plans moving forward. And that's the ability to protect your capital and stay safe, instead of just being stubborn and arguing and saying, no, I'm right, price is wrong. Price ain't never wrong, guys. Make sure you understand that. Stapes. Look at that failed breakdown. A little flush under, and now we're pushing again. Let's look at the daily and see what it looks like here. Yeah, so we had that early failed breakdown, higher low, and now a push. Granted, coming below that failed breakdown now should send you tumbling, but this should be a red flag for people that were short biased, right? Which I was for a while. I still think that should have sent us tumbling lower. But read the price. Just like I just said, price is not wrong, okay? Price flushed under. That should not have soaked right back up and then held a higher low and then pushed, right? So read what price is trying to tell you. Learn how to speak that language, guys. I really think that a flush back into 75 needs to be looked at as a possible bounce play, right? That was that little long trigger. Haven't been retested yet. I don't want to chase price. Granted, we push 77.50. Probably looking to fade it, right? Because it's going to be getting extended into resistance. But I still like the fact that the long on the 75 flush is probably going to be a higher probability idea, okay? Discretionary. This is the sector I want to fade, right? This is the one that's still really ugly, even though it had a bit of a push on Friday. Really relative weakness compared to all the other sectors as well as the broader market. So any kind of push into the 50-day, guys, I'm looking to fade. Okay, I'm not really long bias on this sector until it starts to change its look, right? I could get bullish on discretionary if the chart starts to do something, right? But right now, it's screaming short on any kind of pop up into these resistance levels. Communication still pretty short biased on it, but I still think we need to get up into 52 now, right? I was short biased on this 49 area, but we're through it, okay? I have no problem changing the game plan and reassessing and looking for that next level where I think the higher probability trades are. So 52. I think maybe we could look at 49s as flush opportunities to get long. Meta is the main one, right? Meta is the one that's been pushing. We had this as an idea as well, I think last Sunday prep and the one before, if I'm not mistaken. So if you're looking at names in this sector, right, pick out the ones that are strong and the ones that have setups. That's really all I'll say about that. Still coiling, still getting tight here on BIOS. I still think you could get chopped up really easy by trying to guess, right? Let's remember what we said about was it I think it was materials, right? No, it was industrials. Remember what we said about industrials? You can get chopped up in here trying to guess. It's now confirmed. Now we want to buy the flush, right? Before we had that Friday move, you know, that this coiling area in here is going to be just like XBI is now, where, you know, it could break either way. We could break lower, we could break higher, but playing that guessing games where people get chopped up, right? So wait for a confirmation, then try to buy the dip back into support, or wait for a breakdown. And either, like I said, I don't think a breakdown necessarily makes me bearish on this sector. I think the next level down into 75 is a great spot to try to get in those bounce plays, as well as watch for a higher low on the higher time frames. Okay, let's check out a monthly on this. Yeah, we have not had a monthly bar breakdown in what, 5 months? 1, 2, 3, 4, 5. Okay, so we haven't had one of these bar breakdowns to get a higher low since September. So I think that's a very high possibility that may need to happen. We may need to there's probably a lot of people trying to position in here, trying to get long, trying to be anticipating. They may need to get shook out. How do you shake them out? Well, you flush out on the lower time frames and put in a higher low on the monthly. Okay, so I think that 75 area looks really good for a good spot to scoop. But I'm not trying to position anything right now. Doesn't mean there's not day trades, right? Like, you'll see me trade Moderna, like some of the other, sometimes NVAX. Moderna is really the one that has enough liquidity in the range to get my attention on a regular basis. But those are day trades, and I'm waiting for extensions in the levels. All right, and moving on, Tech into still same level from last week. I think we talked about, right? That 128 to 129 area, looking to fade Tech. I'm hoping we get it, right? I hope SPY and the NQ push into those levels and send Tech up into those areas too. And you'll see that in some of the individual ideas this week. So just keep that in mind, like especially with this and discretionary, right? Those are the names that I think those sectors look really weak. And so pops into levels should have individual names where there's charts that are set up very similar and giving ideas. All right, energy had a pretty good week. We're back above some of those levels. I still think the chart's very intact. If you don't know what I thought about energy for the last few months, go back and watch any of the previous Sunday preps. They're all pretty consistent. That, you know, these are in bull trend. Like, again, the trend line doesn't matter as much as what the actual trend is, and this trend is up. Path of least resistance is higher. I don't think this is the sector you want to fight short. The only time you want to be shorting oil and energy is on extreme moves higher. Anything back in the higher time frame levels of support really has been offering great spots to be dip buying. Okay, and I think it still remains true. Now, I think if I remember correctly, yeah, oil flirting with a little bit of failed breakdown here. We'll see if it holds. If it starts to stuff. Now remember, one second, let me go back to that weekly. Remember, we've already had the weekly long continuation trigger, which was the break above this level here, okay? When we broke these highs, that was the trigger to take us back to these highs. That does not fail. That doesn't become a failed long until we lose these lows here around 108. So even though we're kind of breaking this trend line, until we come under 108, this still could just be making a higher low, right? And regain its composure and push again. You cannot just start to think, oh, this is an automatic fade because we broke, again, we talk about this, guys. That trend line is just a line. It's just a visual guide. Look what happened right here. We broke it, and look what happened right after, right? So had that little bit of a failed breakdown. We'll see if it holds. I would be a bit concerned if we come back under 125, okay? Under 125, I may watch to see what happens on pushes back into 130s. But again, that long trigger is not a failed long trigger until we lose 108s, okay? So that's your sector analysis. We're going to get right into the ideas. As always, we start with the long setups, looking at strong stocks where I'm looking for continuation plays. The first name I'm looking at is SE, and I'm thinking over Thursday's high a day, this could run. I just like this little higher low we put in on Friday. We push up into the 20-day, sell off flush right here, and I think over Thursday's highs, and this could get a leg up. So I'm looking for that. That would be where I would put my alert, is just over Thursday's highs. And the way I play those is once I get the alert, I still need to see support on dips, and I need to see higher lows so I can join trend, right? It's basically just a trend join trade. Next idea is, so it's funny, all these ideas start with S's. The next idea is shop. Another one where I think over, actually not Thursday's highs, but over Wednesday's highs. I don't know why I wrote Thursdays in my notes. It's obviously not Thursday's highs, but over Wednesday's highs, and this would be where I think we could get another leg higher, okay? Let me check out the weekly on this one. Yeah, this pullback was right into the weekly 20. We've just been holding this 31 area really well. So I just want to see if we can break over Wednesday's highs. Again, it's just another trend join trade. Look for higher lows and in some way to set risk and see if you can get one of these big candles to the upside. And make sure you understand something like shop can have some pretty big green days, right? Next idea is square. This is the last idea in this section. Square, 65-60 area for a flush to scoop. You can see, I think, I could honestly see this as a short idea as well, up into the 70s. But I think this is setting up, we got this nice formation here where I think it could reject up there, but I really think you could scoop right into Thursday's high day is basically the level where I'm getting that 65-60 area from. Right here, you can just draw a line straight across, right? You can see it's just been really, really key for quite a few days. So I'm just going to have an alert set there. I want this, so make sure you understand the difference between these trend join plays and these emotional day trade bounce plays or shorts, right? This idea is for an emotional flush down into that level. I want literally like a no bounce 3-point sell off right down into the levels that I'm watching, because that's an unsustainable move. It doesn't mean square won't go lower, but I think if we flush from 69 down into 65-50s without having a real bounce, that's that spot where you're going to get the sellers exhausting and buyers stepping in because it's such a key level, and you're going to get, let's look at a 1 minute chart. You're going to have 3% or so distance. If it happens super fast, you're going to get this 3-4% distance gap between the 1 minute 20 and where price is. And price is not going to, go back through charts, guys. You guys need to look at charts and ask yourself, how far does square ever really, really get from the 1 minute 20 before it sucks right back up to it, right? Even if it does end up going lower, you can go way back. Look right here. This big push above the 20 gets sucked right back to it, right? And it was right into a weekly pivot. Those are the kinds of plays where, doesn't mean you're gonna be right, but you got to have a way of setting risk and shoot or shoot, right? So that's the kind of trade where you got to be ready to take it and just be able to manage your risk. So 65-60, looking to scoop square on a flush early in the morning tomorrow, okay? Obviously, that's the kind of play also where I don't see that being anything like a Tuesday, Wednesday, Thursday trade. That's something where most likely needs to happen Monday morning in the first 15 minutes, okay? All right, so the next section is oversold reversion setups. Snow is the only one I have on my list. I like the fact that it had this little failed breakdown here. I put on watch to see if it is going to become a failed breakdown, right? So if it is going to, and it's going to push back into 132 to retest that breakdown level, then I want to be a part of it, right? So I'm just looking for this 122, what did I write? 122.80s as support, which was the breakdown area that we reclaimed, right? So hopefully a flush right down into 122.80. You can see some support showing up, a higher low or so, something to get involved where I have some set risk and possibly try to get this thing back up into 132. I think you got a pretty nice asymmetric trade there on snow setting up. Obviously can't hold over 122.80. Let me look at an intraday real quick just to see something. Would maybe watch for 121.50s, right? You had Thursday's lows right in there, and then you had that pullback which kind of held right in that level. So like 121.20 to 121.50, that would be another area of interest. But if it can't hold above those, probably throw that idea out and not be involved in this at all. Okay. All right, so that's it for the long setups. Looking at short setups, weak stocks looking for continuation. Apple, rarely have this on my Sunday prep list as especially a weak stock looking for continuation, but I am looking for a push up into 134.50 to fade this. Okay, you got the breakdown level. I mean, I don't know if I need to draw this line for you guys to see this. I'm sure you guys can see it. The 20-day previous annual pivot, just a lot of resistance up there, guys, and we haven't retested it since later in December, right? So I think another pop up into that level probably gives a really nice play. And again, this is one of those plays where I'm looking for an emotional spike off the open. Remember, we have that 392 area on SPY that I'm hoping we retest, right? For the possibility of setting this up for that weekly short continuation trigger. So in order to get that push, you're going to need names like Apple and Microsoft and the bigger names to push, right? So I'm hoping right off the open, a big rip right in the 134.50 area for a fade on Apple. Again, it's a day trade. I'm not trying to swing this or anything. I'm looking for that emotional move into a level, and I'm looking to cover on the pullback on the retrace. It's a mean reversion trade, guys. Next idea, NVIDIA. 157.60, exact same idea as last week. We just never retested it. Again, usually I try not to rehash the same idea. If it didn't hit those levels from the prior week's Sunday prep, you just have to kind of assume that they're still valid. But something that have this much conviction in, if we get there, I do want to reiterate it because I want to make sure everybody remembers and has it on their watch, right? So 100% if we rip right into the 20-day, guys. And this is one where it might be a Tuesday trade, right? Monday, maybe we just push up into the 152s. Maybe we push up into the underside of the 50-day and stuff. Maybe sit back a little bit into the 152s, and then Tuesday a rip up there. I don't know, but keep in mind the ATR on this is 7 points, and maybe we gap up. Maybe we gap into the 150s and rip. So we'll see. Keep it on your watch, guys. NVIDIA. Next, Dash into the 20-day, and I'm there. That's all there is to it. I mean, you can draw a line straight across. The breakdown level here lines up with the quarterly pivot. In the 20-day, you also have the monthly. You have the 50-day, the descending weekly. I just think any kind of spike up into that level, I'm looking for the fade on Dash. Again, day trade on an emotional move into a level. Okay. DDOG 68 to 69 has my interest. I didn't type it in right. All right. Can see it was the breakdown level as well as like a retest of the underside of this little trend line that was broke. Here's this level. It may struggle with this one. I don't know. We'll see. I'm gonna have alerts set all up in these levels, right? But any kind of emotional spike into 68 to 69 definitely has my attention on DDOG. I just think this chart's really, really broke at the moment. Okay. Kind of moving through these pretty quickly. I like that, so we don't spend too much time on them. Microsoft. This is the last one in this section. Okay, Microsoft. Again, so remember, just like I said with Apple, in order for SPY to have that big move up into the 392 area where I want to see the stuff, like I said, you're going to need Apple and the Microsofts and the NVIDIAs getting those pushes. So this one's really far away. Okay, I don't know if we get there, but 234, which was the short continuation trigger right here. Any kind of pop into 234, I'm looking to fade Microsoft. Okay, and again, mean reversion trade on an emotional move into a level. That's all there is to it. I keep it simple. You know, I'm sleeping well at night, carrying no swing positions, and just taking what the market gives, guys. All right, overbought reversion setups. There's 3 names I have in here. SBUX, getting a little frothy up here. I guess that's kind of a pun, right? Really like that 109 area, right? Why? Well, from back here, okay? You can just see this whole area up in here has just been very, very key. Let's see if I can draw this across. I turned on the magnet thing, right, on this trading view, and so now it's always trying to snap to whatever candle I'm hovering under. But I really like this area. You got quarterly, monthly pivot, a big breakdown area that has not been retested, right? We broke down, has not retested up there. You can see what happened when we retested this level, right? This was a major breakdown level, okay? What happened when we retested that? Sat right back down. Now we're getting extended. Seeing, like, guys, even if we're not extended, if this is just grinding higher right into those 109s, I still think there's a pretty good chance that it rolls back over and gives back some of that move. If we get up there in this kind of manner, in this emotional big extension straight up into those levels, to me that's a no-brainer trade. Doesn't mean I'm going to be right, but I will take that shot 10 times out of 10. I could lose on it and come back the next morning, and if it sets up the exact same way, I'll take that same trade. That is a trade. As a trader, for me, for what I do for a living, what the setups I trade, you cannot not take that trade. I hope that makes sense, guys. You have to know what your setups are, and you have to understand that you got to pull the trigger when you see those setups, and there can't be any hesitation. You can't be like, oh, like I'm smarter than my system. Trust me, I've done that a million times, and it always annoys the hell out of me. One of the most annoying things in the world is to skip a trade because you think you're outsmarting your system. And then at the end of the day, you go and see that trade work perfectly, right? I'd rather take a loss on the trade. I really would. I'd rather take that pre-planned loss than to just skip the trade and see it work. All right, well, next idea. So 109s has my attention on SBUX. Next idea is WYNN. 99 to 100. I'm looking for 99 to 100 on WYNN in an emotional move, right? We have previous resistance that's not really been tested since. Again, with this magnet thing, can't get this thing to draw. This is what, 98s, 98.50. You also have that psychological round 100 level, right? And it's getting there. It's not quite as extended as SBUX, but I think a big push into 100 really has my attention. Okay, so 99 to 100 on WYNN for a fade. And the last idea is Boeing, baby. Boeing. Look at this chart. I mean, you guys had to have been, if you want to be long Boeing, you had to have been doing it from these setups here, where you get those setups, you get the break and a retest of what, the 20-day and a key level, and it's off to the races. It's just been trending beautifully. Like even as recently as right here, this setup is just freaking gorgeous. Okay, if I could make these circles smaller, they always just want to go so big on these circles. Whatever. Actually, watch this. Here's a small circle. We'll put these ones up here. This setup, guys. Jesus, what a setup. Okay? Simple as that. Pull back into the 20-day, higher low, break over that intermediate high, it's off to the races. But now everything's changed. This is not a sustainable move. So where am I looking to fade it? 224. If I can get up there emotionally, right? You got the previous annual pivot right up here at 221, but I want to be a little bit safe on this. I want to be as close to that 225 area as possible. Again, this is one of those moves where I don't care if it goes 240. The higher the better, because the higher it goes without a pullback, the bigger the retrace is going to be when this finally gives back some of this move. Just make sure you understand how to spot that exhaustion and how to take advantage of it while still being able to manage your risk. That's the most important part about it. Okay, so that's it. I do want to share one last thing with you guys, and that is we've talked about the when short scream setup that we talk about in True Trader all the time. I've done a Sunday prep on it. We've talked about it in the Sunday prep. And I also told you guys how that's one of those setups that I use Spikeet to scan for, right? Well, this is kind of a little added bonus for the Sunday prep this week, guys. This is heading into Monday. This is the when short scream candidate list. What does candidate list mean? Well, it means they could become what we consider an official member of the When Short Scream Club. The only way for that to happen is for these names to then gap up tomorrow morning and have a push off the open. They can't give back the gap or retrace off the open. They need to gap up and then push, and you really have a setup where you could have a lot of shorts tapping out. So the reason I'm sharing with you guys, go look at these charts. There's a lot of interesting charts, even if they're not short setups, guys. There's a lot of charts to set alerts on. Some of the charts, even though they look like shorts might start screaming or tapping out, a lot of them have some good levels where I might even be interested in buying a retrace of a break level, right? A pullback to support where it just triggered and can give you a good long trade as well. So that's the little freebie for you guys this week on the Sunday Prep. These names come straight from Spikeet, which all I did was go in there and define what that setup is. What does a stock need to do to make that list, and it pulls them for me. And I even have it set to actually show me the ones that actually go from the candidate list to the official member list as well. So yeah, hopefully that gives you guys a little more homework to do, right, for tomorrow morning, so you guys are prepared for the week ahead. I'm gonna look real fast, see if there's some questions. Javier says, thoughts on Nike short at 130? Yes, I actually I thought about putting this on the Sunday Prep, and I didn't. I don't know about 130. Obviously, that would be a nice big extension. It's going to be way past the ATR. I think it's a great spot. I would like to see it retest that monthly 20. Let's look at a monthly chart on Nike and see what we see. Oh man, you know what? This right here is what first thing I see. I don't know if it gets monthly 20. This may be the spot right here on Nike. Let's see a weekly. We'll see. If it gives 130, yeah, I think a great trade. But this may be the move where Nike kind of fades. It's already kind of extended. We're right into those levels. I might actually be watching this off the open on tomorrow to see if there's some sort of maybe blow off, like a little failed breakout above Friday's high day and sits back and makes a lower high. Very interested in that level, just because that was the last major long trigger to send it higher before it rolled over. Okay, so but yeah, definitely 130 is a good spot on an extension, right? Just like we talked about with a lot of these trades, right? Difference between a trend join and a mean reversion trade, right? A big spike in the 130 is going to be a great spot for a mean reversion trade. So good eye on that, Javi. Let me pull up. Let me see if I can find where did I move the chat log to? Hold on one second, guys. Too many screens, too many things going on. All right. See if there's some questions in here. All right, well, it looks... Steve says, so got it. So short screaming is really something we may go long if shorts tap out. No. Short screams means we want to look for the squeeze that squeezes all the shorts out and take advantage of that, and that's where the fade happens. Have you ever been short something and it squeezes you out? You almost always cover at the top, right? That's the idea here. Looking for that short squeeze everybody out. When the last of the stubborn shorts tap out and scream uncle, that's when we walk in and relieve them of their positions and get our short. So that's what is meant by that. The only reason I said the long ideas is, let me pull up some of the charts from there, okay? I think, what was it? MPC was on there. Let me look at some of these charts. I have to actually pull up. Let me pull up the list without putting it on the screen so you guys can. Okay, let me look through some of these. You'll see some of the alerts I've set, and I'll explain to you, okay? Okay, so for instance, MP, right? I'm not trying to buy MP. MP's got nothing but resistance above it, right? See, I have the alert set there. Stalk the fade, right? Any kind of spike up into the 20-day monthly pivot, okay? Simple as that. But then you have some charts like X. Now, X, this chart looks like it's really, really setting up for a big move, okay? You have this setup that we talk about all the time right here. Okay, so if this pushes and breaks above these levels, it could get a big move. Doesn't mean I don't fade a move into 27.50 on a quick little rip off the open, and maybe it's a failed breakout. But I also have an alert down here, right, for scoops off 25, okay, right off the 20-day, because this chart looks like it's setting up. So that's the difference. Just because something's on the when short screen list doesn't mean it's an automatic short. But some of them are really setting up for some shorts, right? So you guys got to go through the charts on your own and figure out what it is that your game plan is going to be. But that's really the explanation. Hopefully that takes care of that. All right, so that's it for the Sunday prep, guys. Please remember when this is the live stream's over, if you're watching this, to leave some comments, right? Some feedback. Hit the like button, share this wherever you can. The link's always there, right? We're always trying to get more eyes on this, try to add as much value as we can. And if you're still unsure about some of the concepts that I'm talking about week to week to week, don't hesitate to reach out to us and join over at TrueTrader. You can use the 5-day trial. You can do month to month. You can get an annual pass, but treat this like a business, guys. I hope to see you over at TrueTrader. If not, I'll see you in the markets on tomorrow morning, Monday. Hopefully it's not your money I'm taking, guys.